action. Let's jump right into the risk disclaimer. We understand risk in trading. Please and always use trade capital only. Do not trade with money you cannot afford to lose. Whether trading stocks, options, futures, forex, cryptos, you know the deal. Follow me on social media. YouTube.com/Chris Pulver Mondays and Fridays. At Real Chris Pulver on Twitter. Those are the two that I'm the most active. Everything else, Instagram, Real Chris Pulver. Try to keep it really simple. Make sure it's me. If anybody's sending you messages that look like me, asking for stuff that seems like, oh, was this real? No, it's not. So report that, please. Okay, let's jump into the charts. Have a look at everything. Wall Street is open. It's been a pretty rough week, but we expected that. The good thing is we survived, right? We had CPI data on Tuesday for the U.S. We had FOMC on Wednesday. We had the Swiss National Bank, the Bank of England, and the European Central Bank all on Thursday. So currencies were wild and crazy and wacky. Traders did a fantastic job this week making some pips. We had an excellent trade yesterday. The euro pairs were a-flowing like the salmon of Capistrano, and offered up some really nice trades. So really good flow for the morning through that ECB press conference, and traders were crushing it. I ended up grabbing about 190 pips on the euro pairs, 240 pips on the day, give or take, with the pound crosses. So all in all, pretty good. Added in another 367 pips for the pound CAD and the New Zealand CAD. Took some short-term profits there, and still turning my attention over to the Aussie New Zealand and the CAD Swiss for some build-up positions into the end of the year into Q1. So that is that. Let me go ahead and log into the channel and say hi to everybody. We are officially live. All right, all right, all right. Good, good, good. All right. Morning, David. How are you? Scott, good morning. Darius, good morning. Ricky, what's happening? Craig, good morning. Any more volume available, as in like the voice? My voice? I can try to turn the microphone up a little bit. I can try to turn the, let's see here. I have the headset up as high as I can put it. Yeah, Salmon Capistrano there, Scott. A little Dumb and Dumber reference. Okay. Good stuff. All right. So SPY is at 385. We have some profits rolling in on the January 20th 400 by 405 expiration. We got filled for 310. The trades we tried to take this week did not get filled. More than likely, we're not going to get filled on them. It was a 290 by 290, 250 on the Qs. We tried to get this filled right on Tuesday during that CPI data. We had a big jump in futures from, it was roughly 8:30 a.m. Eastern time to 9:30 for opening bell. There's a lot of movement in futures, and I wasn't surprised at all that we filled that gap so aggressively. Look, the Fed, Jerome Powell, didn't say anything different. We said that on Monday. If you joined me for my YouTube session on Monday, we said that. The Fed is going to continue to get as much mileage out of this talking and jawboning as possible. Yes, did they raise rates? They did. They raised rates by 50 basis points, as the market expected. Here we are looking at another 25 basis points. This is the highest probability at this time going into February. The market's been contracting. We're seeing drops in PCE data, PPI data. Retail sales were down this week. The Fed is raising rates. Other central banks are tightening as well. The ECB is hinting at probably 2 more rate hikes in the next maybe 2 meetings. So we're still on the bell curve, if you will. The bell curve that looks like this. Let me get us some white space here. A bell curve with central banks that looks something like this. Okay, if we have hawkish on the right side and we have dovish on the left side, most central banks are off of zero and working their way towards a more hawkish stance. Now, hawkish as in out of necessity, they're raising rates because inflation is high. In fact, what I don't recall is what was the inflation print for the UK this week? Everybody know that? Was it slightly better than expected? So we have PMI numbers coming out of the Eurozone, all pretty solid. That's interesting. Anything else on CPI? So we had Euro CPI data. Okay, this is what I was looking at. So CPI data of the Eurozone, 10% came in 10.1, a little bit hotter. The ECB's still expected to raise rates. I was looking for, I thought there was pound CPI this week. Yeah, okay. So it was 11.1 previous, 10.9 forecast. It came in 10.7. So a slight improvement there out of the UK. And ours was on Tuesday. The US was on Tuesday. So expected 7.3 came in 7.1. Everything was, softer. So that's why the market jumped so aggressively on Tuesday morning's futures. But technically speaking, where we are, we're still in a bear market, right? I mean, there's not really any denying. And the thing that hasn't really been priced in by the market as of yet is the earnings compression. Interesting data this week from a newsletter that I subscribe to, Data Trek. They do a fantastic job kind of lining things up. So they're just talking about the reality of the market. And basically, uh, you know, if we see earnings getting softer, guess what companies are going to do? They're going to start letting people go. They're going to start tightening up the bottom line. And, if corporate America is going to start tightening and starting to focus on profit margins, I mean, it would be a way that they can survive, and that's kind of potentially that softest landing on the recession. But look, the 10 and 2 year is a 40 plus year trough essentially for the one of the deepest inverted yield curves we've ever seen, and that tends to be a very true indicator for a recession coming. I don't think we can tighten our way out of it. I don't think we can print our way out of it. I don't think we can, stimulate or jawbone our way out of it. I think that we're facing a slowdown coming into 2023. What's going to be interesting, though, is do we have a slowdown that starts now, and maybe we finish the year on a pretty sour note and Santa doesn't show up? StockTwits had a funny article yesterday. It said, tell Santa that green is a color too, because pretty much for this last week, we started on Tuesday's high, gapped lower, or I'm sorry, gapped higher on Tuesday's open, and then just faded the whole way down. So I still think that the real value, fair value for the S&P is probably around 300, right? So 3,000 on the S&P 500, 300 on the SPY. But a level that's going to be super interesting is right here, these pre-COVID highs around 340. So, am I bullish in this area? Sure. I mean, from 340 down to 300, I'm pretty bullish. What is potentially lingering and super scary would be this the structure that would get us into this broadening pattern. If we, broke the broadening pattern to the upside and we're looking to test it to the downside, we would go well below 300, right? Well below 300. But a couple things I'm keeping in mind is the average bear market and the duration. Average bear market over the history of the stock market is about 38% to the downside. Average duration is about 15 months. So I think it's pretty safe to say that we've had a bear market for the last 12 months. Yes? I mean, we essentially peaked in January of this year, and we have been slowly going lower highs, lower lows the entire time. Okay? Volume up a bit. I mean, I'll try. Let me just use the headset, see if it'll. So I'm going up on the volume. Let me know if this is any better in the headset. Any better? Hello, hello. I mean, I'm in like the red decibels for my streaming service, so I'm trying not to get like the echoey pops. Is everyone's volume maxed out? Okay, all good. Yeah. So just double check your volume. Paul says lost you totally. Chris says good. Sound okay here. All right. Okay. I'll just keep going. If you need to make some adjustments, sure, then that's fine. But I'll just keep powering through. All right. So does that make sense? I mean, 38%. Let's just look at the numbers really quickly. So from high to low. Okay. So let's see here. 38% is about the average bear market. That puts us down around 300. That is where I would expect to see, again, could it get worse? Sure. Could it be not so worse? Sure. I don't know. I mean, this is average. This is what we look for. Technically speaking, pre-COVID highs would be an interesting spot to see if the market's interested in jumping off of that. And also remember, the S&P, the Qs, the Dow, right? They're forward-thinking mechanisms. So this is what I was talking about with that Data Trek newsletter. They had mentioned that there is a way, because of the forward-thinking nature of these markets, that if companies start to cut back and companies start to scale down and they start, laying people off or furloughing, whatever, look, they're going to do it to kind of preserve their bottom line, preserve some profit margins, and in hopes that they can weather the storm over the next, let's say, 3 to 6 months, maybe all through 2023. But the market could get really excited about pricing in a 2024 rally. And again, where are we at from there? I don't know. But I just know that this has been a pretty cooperative bear market. I don't think that we should be surprised if the market drops to fresh lows. It may not be right now as volume is fairly thin. There's always kind of that can we preserve and kind of hold up? Is Santa Claus going to show up here for the Santa rally by the end of the year? I mean, look, we only have one more week, right? I mean, we're going into the final trading week before it's officially Christmas and New Year's. So, I mean, this was kind of it. So the trajectory that this market established this week, I wouldn't be surprised between stocks, currencies, if we just see some additional drifting in the same direction we've been watching the last couple of weeks. If nothing's really changed this week, if we're not putting in tops and bottoms, we might see some drifting occurring. Okay. So if we drift to the downside in the stock market, that's fine. One thing that was interesting this week for me, just to switch gears for a second. Let me switch gears to stocks and options. Just taking some notes. Check this out. This was our week. So we have lowered cost on 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. I lowered my cost on 14 positions, which is fine. These are all stocks that I want to have in my portfolio. 14 lowered cost bases. 1, 2, 3, 4, 5, 6, 7, 8 wins, 1 loss. And if I'm not mistaken, if it's not this week, so Friday is today's expiration, I have a couple of stocks that I'm looking to get called away. I think it's FCX and what was the other one? No, fudge. It's slipping my mind. FCX was one. Oh, SVXY. That was the nice little parallel to the S&P 500. I'm looking to lose each of the stocks for like $7 to $10 profit. So there will be some stocks getting called away for profit this week over the next couple weeks. We have 8 little income plays this week for full profit. So this is Build-A-Bear, this is Halliburton, K-Web, LVS. Some of our casino stocks did extremely well, and we didn't even have to take profit early. In addition to that, we also managed some nice profit this week in equities on demand with other stuff. So here's Telegram. We can just go back and look at all the management we did this week. So took profit on Alcoa, took profit on Alibaba, closed IEF and TLT for profit, closed ARC for profit, FXI closed for profit, International Paper closed for profit, Delta closed for profit on a couple of trades. Apple we rolled, Oracle we took a loss on, Meta we took a loss on. Ford, I did not repair that. I took a small loss on that. That was assigned by the broker. We got rid of that one. Google took a loss this week. But everything else was nice little winners, getting some stocks called away. We rolled Coinbase out a little bit further, so it was less to worry about. Took some profit on Toll Brothers. Pulte Homes, that was another one. I own the stock of Pulte Homes. That was I was thinking of. So Pulte Homes, SVXY, and I think FCX. All 3 of those stocks getting called away for anywhere between $4 to $10 a share. So even though the market is down, we're still grinding away, making some pips. So traders this week, how'd we do? I mean, if you're trading stocks and options with me, did you make some profit this week? I know we did. I mean, all we did on Monday was spent tons of time managing. Forex traders, we had some bonus sessions this week. The euro was really generous on Thursday. We made some nice moves on the pound cross as well. We had to grind a little bit Thursday morning for the pound, but the euro was great. We had some nice short-term trades set up nicely on Monday when I did that video outlook. So, I mean, all in all, not complaining and just keeping cash at the ready. So all in all, pretty good. Okay, so let's take a look at the VIX. Fear gauge, volatility index. I'm just basically, strategy this year has been pretty ridiculous. Every time the VIX hits 20, sell the S&P. How's that working out? Did the VIX hit 20? Yeah. Did the S&P drop? Yeah. Pretty nice correlation. That little strategy this year has produced over 25% gains. Literally trading 2 instruments, or trading 1 instrument. You just use the VIX as the gauge to buy and sell and to time it. VIX hits 20, you sell the S&P. VIX hits 30, you buy the S&P. 25% gains this year. So, there's ways to make money. Bull market, bear market, sideways market, there's ways to make money. Okay, good stuff. There we go. Here's the comments coming in. Brad says, did well, thanks. Yep, good stuff, Brad. Mike says, made some good pips with Masterflex this week. Love to hear it. Greg says up 1,504 pips this week of Forex trades. Fantastic. David up 1,876 for the week. Excellent. Yeah, that's what I'm talking about. Good stuff. Good stuff. All right, currency strength chart. Let's take a quick peek. So the JPY creeping to the upside. Swiss is the weakest. I'm loving that right now. Let me actually load into MetaTrader 4. Load that up here a second, and I'm gonna wrap up this session in about 5 minutes. Oh, what's up, Benji? He's got food all over his face. Per usual. There you go. All right, I'll clean your face up in a few minutes, bro. Okay. All right, MetaTrader getting loaded up here. Let me go back to my browser. There we go. All right, so JPY kicking. Let's have a look at some currencies. Aussie CAD, nice little short-term trade. So this week, I'm looking for a CAD Swiss long. Man, it's just not quite ready to turn, but it's going to be close. I mean, we have some oversold conditions on the daily, some really nice divergence. We got some pivot alignments and pocket alignments. Obviously a trend line break would be fantastic, but I'm starting to scale myself into this this CAD Swiss. So, ideally I look for, we broke down in here. I'm looking for that as far as a recovery trade. We've got a big pocket area as well, back around 72 to 7,300. But here's what's going to happen on the CAD Swiss. I'm not trying to pick the bottom necessarily. I'm trying to confirm that we're going to turn. Once we confirm, then I can start stacking some orders, building that position back up. So I'm just slowly scaling myself back in. Aussie New Zealand, we're at 105.05. This thing's making a fresh low right now. But take a look. We're getting fresh lows in price, but we are showing lower highs in price, but a disagreement in momentum. So again, I'm not saying this is the bottom, but I'm watching closely. Could this have room to drop to 105, 104, 103? Sure. Could it go all the way back down to parity? I guess. I mean, after hitting 114, 115, we're going down to parity again. If we do it and we go in a straight line, guess what? There's still going to be pockets of pivots to trade to. And I will be glad to build a position back up on Aussie New Zealand North. So we'll see what happens. But if we can put in a low here, that'd be pretty fantastic. Put in a low, nice little bullish pattern, trade this thing back up towards 108 or 109. But if I take it all the way down, I'm going to build in from 105, 102.50, 1.00. I'll build that to Aussie New Zealand with some small positions, and also add and stack on the right hand side. Swiss yen 147. Let's go Swiss yen. I'd love to see the Swiss yen start to break. Let's say this structure. Here's our BOJ intervention candle. If we have some resistance, I mean, just come on, man, just go down. I've been looking for a weaker Swiss for a while. Euro Swiss trading at 99. A nice break above 1.00, 99.50 to 1.00. We break above this 200 EMA on the Euro Swiss. I still am very bullish on this thing towards 105. Euro dollar 106.41. We're going to see if the dollar continues to show some signs of weakness. Pound Aussie, pound CAD. Pound CAD took some short-term profit yesterday. Happy that we did. We had a nice little trade going down to the 1 hour time frame. So right in here, I did close up that pound CAD for good. I closed up everything. So that was a sell trade in here, sell trade at the high, sell trade over here, stacked a couple of orders, and took profit at the 200 EMA. So it turned out to be about 4 trades for a small win, and now I'm out. It was just really trying to trade it with an extreme. There actually is still an extreme, if I'm not mistaken, on the CAD Swiss. Here's a 1 hour time frame. It's not ready yet, and I don't want to keep just going crazy aggressive on the trade sizes, but this 200 EMA should get hit sooner than later. Pivot. We have a monthly pivot above, bigger trend line break to build back up. And, I think oil is going to be a factor here. So oil is pulling back. We're at 74. Here's the daily time frame. So we had about a 10% rally on oil. We are just kind of pushing a little bit lower. It wouldn't surprise me if oil settles in for the end of the year right around $70 to $65. We settle in here. Q1 might be a big run in oil and energy. When I say big run, it's like, I don't think we're going back to $100. But I also don't think that we're dropping to, $50. So I would say that this is going to be kind of the zero-sum game on oil, which is we started around 65, we rallied to 130, we fell back to 65. But look at how much work it took. Basically, you have an entire country, China, that is offline right now. You have the U.S., which is dumping its strategic petroleum reserves down to 40, 50-year lows. At some point, it's like, could we produce oil in here? I mean, you're not incentivized to. So, I mean, demand is still as high as it's ever been. I mean, China is essentially the only country that's, I'm putting like light quotes around like COVID lockdown. But, I mean, energy consumption is still super high. We still have a Russia-Ukraine conflict going on. So, I don't know. I just think that I would not be surprised to see, $70 to $65 holding as support, rallying its way back up towards, $90 or so. I'm just not sure what the hurtful level is on oil. If oil is greater than $100, probably stings a little bit. But I think off these, $70 to $65 levels, I think at some point we're going to have to replenish inventory. So anyway, it's going to be a story carrying into Q1. There may be gas shortages. Yeah, that wouldn't be surprising at all. Peter, nice stuff. 1,500 pips bank, mainly Masterflex 4-hour. Love it. That's excellent. EuroCAD, we're trading at 45.48. This is another trade that's not ready yet, but if we get up to, we have about 4,600 to 47.50. This area, I'm pretty interested in looking for a short-term sell trade on the EuroCAD. By the time we get a EuroCAD to turn south, we should have the CAD Swiss looking to turn north. Like I said, Euro Swiss, when we break above parity, that'd be fantastic. Anything else on the pound crosses? Pound Swiss, getting a pullback. Let's see if the pound Swiss can break above this 200 EMA as well. So, if we get a channel going on the pound Swiss, hopefully something like this, we start to work our way back up into looking at 120 as a target on that pound Swiss. New Zealand CAD, we took some profit on New Zealand CAD, which I'm glad we did. This is why it was a little short-term trade. So we wanted to take it down to this 200 EMA. We were short going into this week, took some profit. Like I said, glad we did. So now we can reassess this one and maybe see a better top around this yearly pivot at 88. New Zealand Swiss, we took profit on that one. New Zealand dollar, just hanging tough. Dollar CAD, stay out of that one. Dollar Swiss, willing to scale back in down to 9,000 or so. Dollar yen, we're at 136. Let's see if the JPY can get stronger. Let's go DXY really quickly, and then I'm going to wrap it up here for class. DXY, there's still some room to slide, especially getting through this week's trading. It's going to be a light week of trading next week, volume-wise. It's our last kind of full week before the holidays. There might be some decent volume and decent volatility next week. Why? Because it's like kind of the last effort before it's holiday interrupted. We do have a full week through the 23rd. Realistically, I expect lighter volume. We're probably going to see some drifting, but there might be some pretty decent movement going into this week because it's not a holiday yet. Christmas Eve and Christmas Day is over the weekend. So, potentially institutions and traders might be grinding out for the rest of next week. But we'll assess. We have classes all next week as well. Okay. All right. All right, everybody. I'm going to get ready for class here in the next 3 minutes. We'll switch gears here to stocks and options with equities on demand. Thanks for being with me today for a little opening bell action, a little review for the week. Hopefully everyone had a great week. It was a busy one, but we survived. So we were looking forward to trading together, and we did, and I'm pretty happy with the results. So that is that. Okay, if you do me a quick favor, hit that thumbs up button for me before you go. And thanks for being here today. Happy Friday. I'm type this in the chat. Happy Friday, and have a great weekend. And Equities on Demand students, I will see you at 10 a.m. Eastern Time in 2 minutes. Masterflex students, we have class today at 1 p.m. Eastern Time. Okay. All right, everybody, take care. Have a great weekend. See you soon. Bye.